everyone. Welcome out to the Tackle Trading Halftime Report. It is May 10th, 2019. A lot of headlines sparking fears, talking about trade talks, things going on, Uber IPO. A lot of things happening in the market. We got myself, got Coach Matt, got Coach Mark. Matt, how you doing today?
You know, Cody, I'm doing absolutely fantastic. I'm glad to be back with the halftime crew and to be here on the halftime report.
Mark, how are you?
I don't respond to
I was looking at Cody, and I knew Cody was like, just.
How are you doing, Mark? I'm doing
fine.
I do not respond to pleasantry.
In fact, I think Cody was a little nervous about asking Mark how he's doing for the last 30 minutes.
I didn't. Well, not 30 minutes, but I did hesitate. I'm like, how am I going to approach Mark here?
Right. Listen, I've known Mark a very, very, very long time. You be very direct with Mark. Mark, it's good to have you. What's your read on the market?
Mark, tell me how your day is, man. Seriously.
Nobody cares how my day is.
I care.
Nobody cares.
I care. Are you doing good today?
Who cares about Mark's day?
I care about you.
Nobody cares about Mark's day.
We love Mark. Are you kidding me? Your live drops on the
podcast. Just use me for my expert chart analysis. I understand. Listen, I like my fellow traders like I like my women. Just use me. You know, just use me, and I'm happy with that. The complicated, how are you feeling? I'm horrible.
All right. You are doing absolutely great, if not horrible, but it is a pleasure to have you here today. And Mark, you're on the halftime report today because we want to talk to you about, the newsletter you just put out over there at Trading Justice, the sell in May concept and whatnot. We'll get into that. But before we get into the sell in May concept, Mark, what's your read technically on this marketplace?
Okay, if you remember the trade war from March of 2018, when it was first going on, it was impossible to read because you'd never been through it before. It was a unique news story. And so people would ask me like, well, what's going on? I was like, I don't know. I've never been through this. I've been through Fed hikes. I've been through Fed talk. I've been through I've never been through a trade war. Well, this is the second time now. So those people that traded last March got a taste of the range. And the ranges on trade war days in March were huge. Up, down, all over the place. And so the difficult thing about the trade war is news in the form of a tweet, in the form of a White House statement, in the form of something coming out of the Chinese government can happen at any time. It makes it really, really difficult for directional traders that I like to place a trade and be in it for, a week, 2 weeks, nice classic swing trading type scenarios. It's really difficult environment for those traders because the ranges on days, the ATR, the average trading range, expand dramatically. The source of news can happen anytime. We literally could be talking right now and Trump could tweet something that says, hey, it looks like, So there's a lot of uncertainty and a lot of unknown in this particular environment. Really difficult for those position and longer term swing traders. And so you have to adjust knowing that, hey, I might get a great signal at some point only to have a news event come out 2 hours later and just blow it all up. So what I'm personally doing right now is there's a few stocks that I've been having my eye on that I hope come down, looking to maybe re-enter those.
Let me give an example of that. And I know it's a company you like, Mark. I was running some scans here today, and in preparation of the scanner report meeting later today for the scanner reports that come out tomorrow on Saturday. And when you're dealing with a volatile market like this that has obviously broken some support levels, intraday support levels, there is a couple stocks. You take Microsoft, for example, but the one I was thinking about, and I was honestly, Mark, when I ran this scan, I was thinking about you when I found Coca-Cola, because I know you love these types of dividend payers and these, safe haven type companies and whatnot. And you're seeing a little bit of a short-term uptrend with a tremendous, nice little retracement coming into a major breakout channel that Coca-Cola had earlier this year. Look at this level of resistance right here, right at that $47 mark. and you came down yesterday, kissed off that $47 mark. Good upward movement in price today, and despite the market being down today, Coca-Cola is up close to 1% off that support bounce. So there are opportunities, and there are very, very good opportunities in this marketplace. You take another stock like a Microsoft, for example, MSFT here, a stock that we all love, a darling of the marketplace, so a stock that's been on so many different scouting reports in the last 3-4 months, and you're looking at a bullish retracement coming down into a little support level right there. It's consolidating over the last 3-4 days, and that's a really good sign when you're looking at a marketplace that is down, brink of major support levels. But here's old Microsoft just hovering around support right there at 125. Fairly clean triggers when you get above those intraday resistance levels. I'd be surprised if Coca-Cola is not on the scouting report this week. I'd be surprised if Microsoft isn't on the options report this week, because what I found in scanning earlier today was there was some really good bullish retracements, and despite the fact the market has broken support levels, these stocks like Microsoft, for example, they're still hovering right above support, good bullish uptrends, good bullish retracement. And so it's still that stock picker's market. There's no doubt about that. But you got to be a little bit more cautious with your triggers, in my opinion. And that's what's been very difficult for traders this week, is that you get those triggers to the downside. You get those overnight action where you have a lot of volatility, and then the cash open comes out. And I've said this last week, and Mark, you said it about 3 weeks ago on the podcast. There's just a lot of noise here, no doubt about it. But it seems like with this Chinese trade deal, I mean, there's a pattern here. Overnight, let's release some negative news on the trade deal overnight, and then in the cash open, let's send out Mnuchin and Lighthizer and, I forget the other guy's name, but let's send them out to talk about, we had very productive talks. I mean, the Chinese vice president, who is in charge of the Chinese delegation, left those trade talks today at about noon Eastern Standard Time. Nobody knows if he's coming back or not. And yet Mnuchin's out there saying, we have a really productive conversation. We have a productive meeting. It's all done during the actual trading day. The market responds to that when we all know what happened last night. We put another 25% tariff on $200 billion worth of goods. We're lining up another 25% tariffs on $325 billion worth of more goods. And yet, Mnuchin is talking about, we have a very, 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 very positive trade deal. This to me is just, it's the pattern we've seen in this marketplace, and it's made for a very difficult trading environment.
I mean, you think about it, market breaks down at an intraday support today. Classic signal, not a lot of support. News comes out, rumor comes out, market skyrockets. This is trade war environment. The trade war trading market wrecks classic trading signals, just blows them up. It makes it for a very difficult environment. There's no doubt. And so during this environment last year, and so I'm just reverting to my playbook, I back away from directional type trades quite a bit personally. And I look to hey, what are those stocks that I really like? What are those stocks that I've wanted to add 100 shares of? I want my Disney shares back. I got called out on a covered call a month. I want those damn shares back.
You want those shares back?
I want those shares back. Now, I'm not going to get them back at $106. I get that, but I want them back. And so looking for opportunities to get companies where I missed out or I lost them because of a covered call, or, your PayPals, your Visas, your Microsoft, stocks that were destroying it, that are in great fundamental situations, because technical analysis, what is the kryptonite of technical analysis? It's volatility. What creates more volatility than anything? Unknown events, like things that and so that's where we're at. And so
but here's the frustration on my part. Black swan events are those events that are completely unknown, random. They have an immediate economic impact, but we can't prepare for them. We know what's going on in this marketplace. We know We know we're getting, we know what's happening. We know that the manipulation is happening here. We know they're trying to keep up the market on a positive note on the intraday. We know the negative news is coming out overnight. We know there's a lot of smoke there. We know the economic condition that we're settled in, and it's becoming a very, very difficult trading environment from a market perspective. But when you're looking at, you mentioned PayPal, Mark, and it was another stock that came up on my scan earlier today. You look at PayPal and you have a really good bullish uptrend. You have right now a good bullish retracement in PayPal, and I'm looking at a potential stock here, and I'm getting excited about it because I got a very, very clean intraday resistance level right there at 110. And so I have this short-term bearish downtrend from the retracement perspective. You're looking at this on an intraday chart. You have this very consistent trend coming down here, and as it comes into these intraday resistance, it then breaks out of this intraday resistance here, sets a resistance at 110, double bottoms right here at 107.5, retests that 110 level earlier today. That to me is an easy trade. And so I know it's a difficult trading environment, and I know the whipsaw can happen, and volatility and randomness and Trump's Twitter account can all have an impact on the marketplace. But when you're looking at this from a trading perspective and you try to reduce that noise by just focusing on the technical analysis, and you come back down here to PayPal, and I got a trend that looks like this, I got a pattern that looks like this, and as you can see, we're consolidating at that support level at 107.5. You have a very clean trigger above 110. That to me, despite the fact that there's a lot of randomness in the market right now, and despite the fact that it's been the worst the worst bullish week in the marketplace year to date, you still have some really, really, really good trading environments. And this is a lot of times what you look for as a bullish trader. You look for those retracements to come back down. You look for them to consolidate at support. You look for those easy triggers like you have on PayPal and Microsoft right now, and you don't get scared of it. You don't get scared of it. You don't change your plan. You attack the market the same way you're going to do it. Maybe you reduce position size. That is certainly appropriate in a condition that we're going through right now. So if your standard position size in a swing trade is say 3-4%, maybe you drop it down to 2%. If your standard position size in a day trade is 1%, maybe you drop it down to 0.5%. But you reduce position size, but you don't stop trading. I mean, look, I was only on the halftime report on Monday, and I talked about adding bearish delta. Mark, 4 of those 5 stocks I was looking at on Monday, all were awesome this week. They were all awesome this week. The only one that didn't work out this week on the stocks we were looking at on Monday was Penn, and it snapped back, coming back into resistance. That's really the only bearish one that didn't. And so as a trader, you got to have those bearish trades to offset some of the bullish trades. And when you start to see the market volatility pick up, you got to add some bearish delta. You have to do that. You cannot just think about the bullish side. Reduce position size, add some bearish trades to the equation, delta weight your portfolio, and act like a trader.
Act like a trader. No, this weekend, go sign up. If you are not a pro member, I'm writing the options report this weekend for Tackle Trading. And I'm going to go over the classic step system signals. And I'm also going to talk about that pesky girlfriend of mine, the 9 EMA. And I'm going to give secondary signals that I look for, because that pesky girlfriend of mine is going to be in the way of a lot of situations. If you don't know who my girlfriend is, it is the 9 EMA. It is my personal favorite indicator. And because of the market conditions, I have all of these great setups: PayPal, Microsoft, potential reentry. But that pesky girlfriend of mine is sitting right on top of each and every freaking one of them. And so how to play that really critical moving average, I will also go in the options report on the individual picks. It should be an interesting conversation in our Friday meeting today, where we analyze and make our selections for our options report this weekend. Go sign up for it. Go to the Tackle Trading site, go to the store, sign up for that 15-day free trial. If you can't find it, email me at team@Tackle Trading. I'll get you a link. You absolutely are going to want to look. If you're looking to re-enter the market, if you're looking, the options report is going to be a must read this weekend. So for your pro members, expect a long video this week. Expect a long video.
Well, and
I sooner we work though.
you look at that 9. You take a look at that 9, right? And the 9 EMA is one of the most widely followed exponential moving averages out there. And if I have to hear a debate on the 8 versus the 9 in the scouting report meeting today, I'm going to lose my damn mind.
Well, I've already laid down the law. If you use the 8, you're an idiot. If you use the 10, you're and you're lucky, it gives you relatively good signals to the 9. The 9 is the default. Like you go to Thinkorswim.
It is the default, but the difference between the 8 and the 9 is a fraction of a fraction of a fraction.
Yeah, but for computers, that fraction makes a big deal.
It does.
When
it does.
I would use on $1 in seconds, constantly over and over and over.
I mean, I would just ask you if
I'm not arguing the 9 versus the 8, but what I will say, regardless of that, look at the importance of the 9 EMA throughout this entire market movement that we were up to the top side. There was only a couple times where we got underneath that, and we fairly quickly consolidated underneath those levels to reclaim that. And then you see here, right here, look at the 9, look at the 9, look at the 9, look at the 9. Once you get underneath that, if you kind of hover in there, look as this 9's coming down, it coincides with a lot of the tops of the day. That 9's going to be very, very important. Before you start getting, any type of bullish back in the marketplace, you got to reclaim that. You just have to reclaim that. And that's something I've talked about in the past. When you violate some support, you got to reclaim those levels before you start getting back in aggressively. You look at this nice little trend line on the intraday on the ES.
That's a really.
It's a very consistent trend line, and you're not bullish until you get back up above that trend line. I'm willing to bet that trend line's close to the 9 mark.
No, and this is what is going to make this particular week a pro-level entry week. All right, so let us break, and I'll break down this lots more in the options report. Let's say I get a trigger on a stock, but the market hasn't broken that trend line. What do you think I personally am going to do?
Wait.
I'm going to wait. I don't care what the individual trigger on the stock is. I need the market itself to break that trend line. And so until that happens, I don't care the individual trading signals. I have to have that broad market signal to go in conjunction. And I'll walk through all that.
Well, and Mark, what you need to see, what you're describing is exact what I was talking about on PayPal. It's the exact same concept. When you're dealing with this bullish retracement coming down, you see this trend line come down, as you can see over the course of the retracement. Then you consolidate, you get back up above that intraday trend line, and then you have your double bottom, double top from the overall.
Stay on the daily chart there for a second. What slapped it down the last couple of days?
9.
The 9. My girlfriend, she don't like your forward advances. She will slap you and slap you. You try to get at her too fast? No, she's going to slap you down.
I'm going to tell you though, this PayPal's resilient to the 9 though, Mark. It's resilient. It keeps testing it. It keeps testing it. It keeps testing it. It has tested it literally for 4 straight days in the marketplace, and that's why I see this trigger on PayPal is so easy. Wait for it to close above the 110. Your order is right above the high of the next day. That's an easy trigger. And when you're looking at that as the easy trigger, and you're looking at this type of volatility we've seen this week in the marketplace, you see this trend line coming down. You need to see that double bottom from the intraday perspective. And while that double bottoms and consolidates, and maybe it happens here at about 28.50 in the marketplace, but that's what you want to see. You want to see, and coming back down to that 30-minute chart, you want to see this marketplace come back into resistance, come back down into 28.30 by 28.40, hold its support level at 28.40 to 28.30, double bottom coming into from an intraday perspective, and then watch that 9 EMA catch up over the next 2-3 days in the marketplace to give you that really, really strong buying signal. But you don't want to chase the dragon, and you certainly don't want to pick up the falling knife. Let it double bottom, let it double top on that 30-minute intraday chart, let it get back up above those trend lines, and then let it break that 9 EMA. And you couple that, and you just be patient and you wait for it. That's all you do.
I've had to pull out the old man, chastise a few young traders this week who are like, I'm going to get in. This is pullback we've been waiting for. I'm like, listen,
Wait.
young grasshopper.
Wait.
Patience.
Just you gotta let this play out. I'm not saying there's not a great opportunity coming up, because there very well could be.
That great opportunity isn't right this very second, as the market has an intraday lower level of support and you're forming a bearish retracement coming back up into resistance. That's not the signal you're waiting for. You're waiting for the double bottom, double top, violate this trend line, and then watch that 9 EMA come down on the daily chart.
I mean, personally, I would like this. Now go to a weekly chart. My ideal dream scenario is that this market tanks down to that rising 20 weekly, signified by the red line there. So you got a rising 20.
I think you might get it. 2800 is my real target here.
And so, like, I would love the market to sell off to that point and have those reversal signals that Matt is talking about form there, where we get those intraday double bottoms, and then we get it, because then my bullish signal, oh my goodness.
You give me two, 3 weeks down into 2800, consolidate another down day, another down week next week, followed by a slowing momentum.
Well, to be fair, the way computers work, it could be 2 or 3 days.
Well, yeah, I know, but we were looking at the weekly chart here. You can't deny the fact that we've seen an increase in volatility this week. You can't deny the fact that you have more uncertainty coming into the weekend this weekend than you even did last weekend, when we didn't know what was going to happen. We didn't know Trump was going to send that tweet on Saturday. We didn't know what the Chinese delegation was going to say on Sunday. We didn't know they were going to. We didn't know any of this, but now we do. You can't deny those. You can't just shun your eye towards everything that is happening out there. You got to be a little conservative. You got to be a little cautious right now, and you got to wait for the right signal. You got to wait for the right signal.
And listen, if you are out there and saying this is just too difficult, I mean, I can't deal with.
Oh God, get off that! Get off that! Too difficult. 1 week down? Are you kidding me?
But that's,
hold on, I want to speak to that. If anybody in hashtag like, oh, this is just too difficult, guys, come on. Markets don't just go up. Markets go up, markets go down. This is not something that should be like, oh my goodness, it's the craziness. The markets, what is the market down? 100 points in the last week, 100 points. The market's down 3%, guys. Come on, let's have some perspective here.
No, I mean,
and hold on. And coming out of very, very easy trading environment in November and December, a very easy trading environment, and a very, very easy trading environment in February, March, and April. So let's not get all crazy and be like, oh, this market's just so hard. Come on, get off that stuff.
No, I mean, we had a great trading environment for months and months and months. Be grateful for those times. And then when you have a market starting to sell off, there's nothing wrong with patience. The problem that some traders have, and if you're out there and you're like, oh my goodness, that's me, listen, it's all a learning curve, is that you ride trades and never take profit, and you never change your strategy. Some of the traders that have the most difficult time in the last year are traders that only go bullish, and they're always, no matter what the chart is saying, letting those ride endlessly.
And they don't adjust, right? The number one pattern in the market the last 4 weeks has been a high base breakout. That has been the number one pattern in the last 4 months.
Money pattern.
It's been the money pattern. And this is the week it didn't work. Okay. So let's now switch. Let's adjust. And let's be very clear. What percentage of traders lost money on Monday and Tuesday?
Most.
Everybody?
Most, yeah.
I can't imagine anybody that didn't.
I did. I lost money on Monday and Tuesday. When you're going into a weekend and you are bullish on the marketplace and you have random news that happens and you have volatility pick up, yes, on those Monday trades and Tuesday trades, you're going to get stopped out on those bullish trades. It's going to happen. You're going to take. That's why you have a stop loss, right? That's why you have position size rules and risk rules and stop loss placements. So on Monday and Tuesday, yes, I'm willing to bet.
Let's go to PayPal. PayPal has been. How much money has PayPal made people this year? A ton. Ever since you've had that breakout, these are weekly candles. These aren't daily candles. That's how strong this freaking trend has been. Ever since you broke out of that resistance level several months ago, I mean, look at those short-term moving averages, just clean house, clean house, clean house. Like, it's been a money. Now, if you owned PayPal heading into this week, you're down a little bit. And you don't care. But like, how many different trades have people made? People have cleaned house on PayPal. People have cleaned house.
In the last, from the snapback rally, taking out that January snapback rally, because we did not, nobody really performed well in January, Mark. I mean, you were talking about unprecedented snapback rallies, and we were looking to short. But from February on, PayPal had clean triggers above 94 with a retracement down to 95, had another trigger above 98, had another bullish, not a bullish retracement, but a kiss off the 9 at 101, had another breakout at 104, had a kiss off that 20-day moving average at 106, had another breakout at 108, and then the one that confirmed above 110 didn't work out.
I mean, if the only, and this is why the girlfriend is my favorite indicator. If all you ever did in a trending market is use the 9 as your re-entry and get out signal,
it lost 1 out of the last 6 trades.
Like you're gonna win. You're not gonna win every trade.
But
you're gonna win a lot.
To finish my thought on every trader losing money on Monday or Tuesday, it was the traders who started adding bearish delta on Monday and Tuesday to offset those bullish trades and then get stopped out on some of those bullish trades on Monday, Tuesday, and Wednesday. It's those traders that made adjustments that really kind of looked at this week as an opportunity. It's the traders who failed to adjust that really struggled in this week. And if that is anybody watching the halftime report, either live or after, don't let that stop you from doing your job as a trader. Each one of these markets are an opportunity to learn in a different market environment, number one. But number two, Mark, these type of pullbacks, they do give us a lot of opportunity. A lot of time when the market starts pulling back 3, 4, 5%, that is some of your best buying opportunities in those short-term trends. When the market corrects 10%, that's some of your best position type opportunities to buy, stocks that are in short-term bearish downtrends, double bottoming, and that opens up great position type trades. When the market starts correcting 20% and we start getting into those bear markets, that's an opportunity to start adding to great value stocks long term. If the market drops 50% in a massive bear market, you throw everything you have at the bullish condition. It's about your time frame and what you're looking at. And when I'm seeing a 3% pullback in the marketplace, I'm starting to look at bullish retracements in PayPal, bullish retracements in Microsoft. I'm looking at a couple other stocks. And guys, I only ran like 3 scans today, and I found 20 potential really, really, really good trades. You look at ABMD here, for example. Okay, these are my bearish list. So let me look at some of the bullish ones real quick. We already talked about Coca-Cola. Well, what about Adobe here, Mark? Good bullish uptrend, consistent retracement coming in between the rising 50 and the rising 20, coming back down into the breakout channel right there at about 270, slowing its momentum. You have that double bottom there at right around 270. If you drop that down into the intraday, this is exactly what I was talking about, Mark. Here's another example on Adobe. Bearish downtrend, very consistent, trend line right there. You're completely violating support. You got your double bottom. Now you got your double top there at 276. Maybe you wait for it to reclaim that 9 EMA, which is coming down right at about 278. But that's an opportunity, in my opinion, from a short-term perspective. When you're looking at Ameriprise, AMP, bullish uptrend, bullish retracement coming in between the bull zone, between the rising 20 and the rising 50. You have expanding momentum to the top side. Look at that 20-day moving average, expand off that 50. That is what we call short-term bullish momentum. Good retracement, good double bottom there at 140. Good double top right there at about 143. That is another buying opportunity. When you look at AYX, same type of situation right there. When you look at Discover, DFS.
Yeah, I like that last one a million.
Mark, I got a list of 20. But I'm not kidding. I got a list of 20 that's doing the exact same thing. So if the traders are looking at this and they're like, oh, we had a tough week this week. Yes, not every week is a productive and profitable week, but that doesn't mean it's not going to set up to be an amazing week next week. Nobody knows what the weekend's going to hold. We don't know what's going to happen with Venezuela. We don't know what's going to happen with Iran. We don't know what's going to happen with the growth situations in Europe. We don't know what's going to happen with the trade deal. What we do know is that technical analysis is king, queen in the court gesture, and it reigns supreme. We have to focus and trust our signals. And when I'm looking at a list of 20 stocks that are all doing the same thing with a great bullish retracements and great bullish uptrends, and you've had just simple profit taking over the course of the last 3, 4, 5 days with a lot of these good bullish uptrends like Microsoft, Adobe, Discover, AYX, Ameriprise, you know, those are opportunities. And so if any trader this week saying, oh, this is just so hard, it's like, well, you're going to miss out on great opportunities next week, because I promise you those scatter reports are going to be chock full of great technical patterns, both on the bullish retracement side, high base breakout that's still consolidate above resistance, but you also have triggers to the downside as well, with a lot of stocks hovering at support levels, major support levels that have broken. Those stocks go down, the retracements go up. I think we're going into a market next week that's going to be a good trading environment.
Keep talking. I want to eat some more donuts.
No, I knew what you were doing. It's your time.
If that talks, I get stuck on my donut.
Wait, that analysis wasn't good? That wasn't good enough? I got to keep going?
Now, everybody trades a little bit differently. And like for me, I just hope this market sells off some more. And I know there's people out there like, I hate you, Mark. Don't do that to me.
I would love the market coming and kissing off 2,800. I would love that. But you might not get that. You might not get that. And if you don't get that, you double bottom, you got to approach it this way. The market doesn't care what we want. If we get a double bottom off this, if we get a nice little slowing momentum off that rising 50 mark, that also coincides with a good old breakout right here at 28.63. That's currently your pricing, currently at 28.61. You might get that double bottom intraday here. You are showing some strength from an intraday perspective right now. You're coming back up into these resistance channels. Yeah, I do see it fading back down. Okay, I don't expect it just to break and run, but if it does reclaim that trend line, and if it does reclaim that 9, you're talking about a lot of those bullish retracements that are going to trigger, and I'm not going to miss those.
The trade war is a fascinating trading event. It really is. And there is nothing wrong if you're new. I mean, once again, every week somebody new starts trading for the first time. And if this is your first week trading, it's like there are much simpler times. This is an extreme example of unknown events permeating the market. This is about as extreme as it gets. So if you're really new, these are usually a little more,
Mark, I remember my first trading. I believe that my first trade I ever made, the market went up like 3% that week. And obviously, new traders always think bull, right? They always think bull. And I'm like, wow, it's this easy. This is 14 years ago now. Oh my goodness, it's this easy. That is amazing. I mean, all I have to do is buy call options on any stock without knowing anything, and I can make $1,000 every time I make a trade. Oh, that is fantastic. It was the worst thing. It was the worst thing for me. It was the worst thing. I got overconfident. I over leveraged, and I literally got punched in the face 2 weeks later. Right. This week probably would have been a tough week for new traders, no doubt about that. But 1 week doesn't make a trading career. You're going to be trading for the next 30, 40 years, guys. Have some perspective. You're going to make 10,000 trades.
I love these events because, I mean, go back in the chart to last March and April, and that time period heading into June. 10 years. Okay, apply. I've done this a lot recently.
Yeah, I know. We'll talk about it. So you want 18, right?
Yeah, I mean, so so they're at the bottom there at 2,600. This is the last time the trade war manifested itself in a huge way. In late February, back on those 3 red candles, so the market rebounded off the sell-off, and then it was, I mean, go back a little bit. No, let me just, here, let me share my screen. Let me share my screen.
Do we have to see your profit charts?
No, they took away profit charts.
Thank God. They were the worst thing ever.
You still use the white background, though.
That's bad, too. I'll tell you, though, a 3% downward movement in a market is not tough. You know what was tough? Last October and last January of 2018. Those were tough trading environments.
All right. Because I think like understanding if you're new, and because most people, I mean, Listen, we've been around a long time. There's not a lot of people we know that have been trading for as long as we have the, traders, they fall out because they lose faith, they give up, all of that good stuff. And so a lot of you out there are in the news cycle, and once again, do not give up ever. Trading is an amazing journey. But like just going back to get some perspective of the last time we had the trade war. So back here in the market right here on this red day last February, Jerome Powell spoke. Now, whenever Jerome Powell spoke in 2018, the market went down. We had a little bit of a rally. Jerome Powell spoke, said his normal things that before he became a sophisticated deliverer of market messaging, he was terrible, voicing the market down. But then what really got it going is Trump started talking about tariffs on steel. And this is where the trade war dialogue started hitting in. Market got spooked, being like, hey, what's going on here? This isn't good. Markets hate trade war. They hate tariffs. Market rebounds. But then Trump amps up his dialogue and says, hey, Canada, Mexico, Europe, no, I'm going after China. And it started this time period, which I call the tweet range, is when the trade war really first, I just sold a put on Match. That's nice. Where the trade war really hit center stage in market dynamics. You will not find this set records for the most volatility within the tightest range ever in the market history. You notice that the range itself looks pretty narrow, right? That range was almost 900 points, where every other day, it seemed, a new bit of information on the trade war would come out. And the market went back and forth, back and forth. It is the tightest range with the most volatility in the history of the marketplace. So the trade war is a unique thing that can create insane. And look at this. You'd go down 600 points one day, 2 days later, go up 800. Like, it was absolutely an insane environment. I wouldn't be surprised if unless the White House has become more sophisticated and has a plan. Now, their plan, it might be right now, is bad news at night, good news during the day. That's not going to work long term.
It's not going to work next week.
It will prop up the market for an hour, like it will, but
nothing will frustrate the traders more than that nonsense manipulation. Everybody knows it now. Everybody's already frustrated with it. Everybody's already calling Kudlow a complete liar and just.
Oh, they are liars. They are.
Yeah. Well, of course.
Well, I'm not pathological because they're actually calculated.
They know they're lying. They know they're lying.
They're calculated liars. They are trying to achieve two objectives at the same time. They want a trade war with China for either philosophical, political, idealistic, or to appease their base. So they want pressure on China for whatever reason in their calculations. They also want the market.
I think they want Jerome Powell to cut rates.
So they're trying.
That's absolutely true. They do want that.
And if you as a new trader say, listen, I'm going to sit out and let this play out a little bit, because what happened as that storyline played out, what happened? Eventually, the market found stability. You broke out of resistance. It took several months. And you had a nice couple-month trading environment. So, it is really difficult to predict what is going to happen in the coming weeks, because
I get asked this question a lot, Mark. Why doesn't everybody trade? Because when you find trading, you try it, And then the first time something bad goes on, they just capitulate and give up and say trading's gambling.
They give up, or they start doing really stupid things.
Really stupid stuff like over position sizing. But what happens is they get shaken out in these types of markets, and they miss out on some of those really, really, really strong trends that develop over months and months and months and months, very similar to what we had in February, March, and April. This is one of those moments. That's what this is. We don't know what is actually going to transpire in the future. What I know, and this is the only thing I care about, I got a nice double bottom on PayPal at 107.5. I got a nice double top on the intraday on PayPal at 110, and I got an easy trigger above 110. That's what I know. I got a great bullish retracement on Microsoft. I got a great bullish retracement on, take another one here, Mark. Look at STZ for a second. Constellation Brands. Get off that weekly chart.
No, that's look.
Get off the weekly for a second.
That's a nice little pullback on the weekly chart.
No, it coincides with a really good retracement on the daily too. Obviously, you'd have to find triggers and whatnot, but that's a bullish retracement off a weekly coming back down into a pivot. And Mark, I saw this across the board. I saw this across the board with strong bullish trends. Most of them held support channels on their bullish retracements, and that gives you a little bit of an opportunity there.
Now, this is the one I love. And you don't find many of these setups, because what you find on a lot of these retracements is situations where you have all these layers of resistance. Match, you don't have that. And I mean, these are rare. These stocks holding. This is my favorite stock of the year right now, as far as in bearish environments. So many, because here's the thing, and this is the thing, if you're new, you have easy stretches of trading like you've enjoyed for several months now.
Mm-hmm.
They're just easy. It's easy. And guess what? There will be another easy stretch down the road. Just a little bit of difficulty. I love this one.
Yeah, that's a strong breakout out of a consolidation coming out of earnings, and they had a very good earnings. It's just a matter of where would you trigger. That'll probably be on the options report as well. Mark, you wrote a newsletter for the Trading Justice podcast this month, and it's good timing on that since we started May. We've had some downward movements in the price, and there's an old market cliche, Chucky, called sell in May and go away. And we got all those market cliches we love. The trend is your friend. Don't catch a falling knife. Don't chase the dragon. I think I just made that one up. But we have all these.
Don't chase the dragon.
Yeah, I've been saying that when stocks overextend.
Yeah, I've been saying that for a while.
Yeah, don't chase the dragon.
Okay, so don't chase the dragon means as a stock is overextended after a breakout, you don't chase the dragon, you let it come back down into support. So that might have been Game of Thrones themed.
It's an inverse of don't catch a falling knife is what it is.
Yeah, pretty much. But there is a very, very one of the number one market cliches out there is sell in May and go away. And it's every May we see it, Mark. We see it on CNBC, Reuters, Bloomberg. We just see it constantly, right? Mark, you're a data-driven analytical, okay? Mm-hmm. In the newsletter, Mark, is there, and I want you to talk about this, but is there any evidence to the truth of sell in May and go away?
All right, so we got to put ourselves in the proper mindset, because almost every saying has some origin. Sometimes there is real truth to it. Sometimes there's a little bit of truth. The phrase sell in May and go away is widely misinterpreted and misconstrued by individuals who simply like to hear things and then run with it. A lot of people think sell in May and go away is May is bearish. You short in May. And that the saying is actually originates and is meant for long-term buy and hold investors. Because when you look at the months of May through October, in which this saying is talking about, the returns on May through October historically are in fact lower than the returns of November through April. Now, it's been very minimal in recent years, but there is some truth. But what's a problem that individuals, and I've encountered this for years. I've literally had conversations or been in the room with conversations where people say, see, that you sell in May and go away. That's what you do. And they're talking like it's religious gospel. That doesn't mean that the market loses money from May to October. It just means that overall the returns are slightly lower for those months than the returns on November through April. But what's worse is people and many traders, because I don't know why, maybe because it's a clever saying, maybe because they don't have education, maybe because they're looking for an easy answer, they literally interpret that saying to mean you short in May. You look to go bearish in May. And in the newsletter this month, I look at the last 10 years. Trading Justice website, it's a 4,000 word newsletter in which I go through the last 10 years of data and look at, if you had that mindset of going bearish, if you had that mindset of not looking to go bullish, what did you miss out on? And it's absolutely fascinating. The last 5 Mays, prices went up. Now, right now you have, see, this month is creating a whole new generation of traders that are like, see, this is why you go away in May. This is why you go bearish in May, which is absolutely lunacy and against all the data. 7 of the last 10 years, prices went up in May. The last 5 years, prices went up. There has been some outstanding trading opportunities, classic setups, breaking resistance, trends, outstanding opportunities. And I detail all of those in this month's newsletter, where if you were, I'm going bearish, or I'm sitting out and I'll come back in October, or I'm going bearish, you missed out on some amazing opportunity. And the last 5 years, you lost money because the market's been up in May. Now, once again, because we live in the here and now, and nothing that ever happened before or ever happened again mattered, you now have, and I'm engaged in conversations and I hear the banter, see, this is why you sell in May and go away, because it's happening this year. It's like, had Trump made those tweets in April, would it have mattered? I mean, like, it's like, there's a little bit of coincidence going on with those tweets and the month of May right now. But once again, people are gravitating towards that saying, looking to go bearish simply because of that saying. And it's complete insanity to me. It's complete insanity to me.
Well, and I read your newsletter last night, Mark, before Christian posted it to the website, and very detailed, by the way, extremely detailed, backed by the data. And what I came away with is, I did a deep dive on the sell in May, I believe the last time I did a deep dive, I think it was 2015 is when I did a deep dive on it. And the statistical edge I saw in 2015 in testing the data from 2015 through 2008. Okay, so from the start of the bear market throughout the quantitative easing market is what I was analyzing, and there was a slight statistical edge on the sell in May. There was a slight statistical edge, but when I mean slight, I mean like 53 to 47%. Okay, like standard trend type probability, right? But when I read your data, Mark, that statistical data did not add up to a slight edge on the sell in May concept. I mean, you literally, and the data is there, guys. Go out there. It's already posted to the website. We'll be sending the PDF here later on this weekend, maybe early next week for the newsletter, for those of you who have signed up for the newsletter over there at tradingjustice.com. But when I read your newsletter, Mark, the data is very, very compelling. And I personally don't see an edge there.
Well, let's just look at the last couple of years. May. I mean, and think about it. Are you going to base your decisions on some stupid saying, or are you going to play breakouts? So when a breakout occurs after May, when a stock is uptrending, are you going to be like, well, you don't trade in the bullish months? What about the year before?
I'm buying PayPal above 110, Mark. I'm not changing my approach to the market simply because the calendar month is May.
I mean, are you now, like, when the market is in uptrend again and it breaks out, are you going to go? Are you going to go bearish? Because that's what these people are saying.
Okay, let's take another thing really quick, Mark. The Santa Claus rally, right, happens all the time, and yet in the halftime report, guys, and for the halftime crew, all last November, all last December, were we shorting or buying more? In every one of our reports, in every analysis we did in the halftime report, we were looking at more short positions coming into that Santa Claus rally than the buying positions, because what was the market doing? The market was trending bearish. It started trending bearish in October, throughout all of November, throughout all of December, and it wasn't really till December 26th, after we saw that double bottom and the massive capitulation from the Fed and from Mnuchin specifically with the plunge protection team. So so every market, you're going to have these cliches, but at the end of the day, you got to trade the trend, and until that trend is broken or violated, you got to trust the trend more than absolutely anything else. And so with this market right now, yeah, have we had a sell-off to start to start May? Yeah, but you're coming smack dab into support levels, and you're finding a lot of bullish retracements out there. So I'm not going to stop trading those bullish retracements simply because the calendar is May.
It's people that
James. Now, what we find on the halftime report, guys, is there's.
Oh, that did make me laugh, James, right there.
Yeah, that was funny, James. That got me laughing too. No, we do know that we do have a competitor that likes to dislike some of our posts.
He'll pop it. He'll pop it and dislike him.
He'll pop in, but let the haters say it. We don't care about that. But most of the time we get dislikes on the halftime report. It's usually somebody who clicks the like button is what happens. So not too worried, but get those likes up. Come on, what are we doing?
I don't care if you dislike me. I don't care if you like me.
Yeah, Mark doesn't care. This ain't a popularity contest for Mark.
Hit a button. Get out there and like. Give me your opinion. Like, dislike, but read that newsletter, because
thanks for that one.
Here's the thing. Here is the thing. Either you believe in technical analysis, you don't, or you're on the fence. And I don't know, you make a compelling case, but I don't have that faith. I have an absolute faith in technical analysis. So sayings like sell in May, I think, are tremendously dangerous.
Mark, you're one of the finest technicians ever if you can read that chart off based on your chart settings.
Yeah, that's an easy chart to read. What are you talking about?
A black chart. Come on, get a black chart up there.
Oh my goodness, it's white. It's Luke Skywalker. Don't go to the dark side. I like the white background. Hey, listen, we all like what we like.
We do like what we like.
Those are the same. Next time I'm gonna make my candlesticks purple and pink. How you gonna like that?
That's the amazing thing with charts. We can set up the charts how we personally like them.
I mean, that's the thing is, I think standard 200-day moving average is a red line. I think that's what standard 200-day moving. I like blue.
It's green. Standard 200-day is green.
I don't care. I like it blue.
The standard chart settings: green candles, red candles, bullish versus bearish. 20 is red, 50 is blue, 200 is green, and you can set up whatever the 9 you want at. But enjoy that. But that's the standard colors, and I was taught that when I was a first young trader. I've just used them throughout my entire trading career. So that's all. That's anytime you see my charts. Red is the 20-day moving average, 50 is the blue moving average, and whenever I have the 200-day moving average up the screen. And I can't remember who taught me that. But yeah, that was just the standard I was taught when I was young.
Listen,
all right.
It does throw me off whenever people color on anything different. I'm like, all right, when you look at the 20, they're like, oh no, that's the 50. I'm like, why is it red then?
Yeah, it's people who change their settings on RSI to match what they see it, or they change their settings on MACD to what they want, or they change their settings on stochastics to what they personally like. And it's like, why don't you just use what the market uses?
Use what the market uses, because that's what matters.
Yeah.
Why do I like the 9 EMA? Because
the market uses it.
Because the market uses it.
Well, Mark, why does technical analysis work? Because people use it.
Self-fulfilling prophecy.
Exactly. People just
use it. When you get that, that's where faith starts building. When you're out there and be like, wow, me and computers and tens, if not hundreds of thousands of other traders are all looking at the same thing. And we're getting in. This is why trends are so pronounced. This is why support and resistance matters. This is why moving averages are powerful, because we are all in mass collusion with one another. We never talk with one another. We never have this gigantic meeting where, hey, what are we all going to do today? We're all looking and trading off the same signals. And so it works. It's not because it's magical or mystical. It's because we're in one of the biggest collusions.
Isn't one of your biggest beliefs in the 9 is because that is the #1 moving averages that you personally believe high frequency trading systems use?
Yep. That's it. There's nothing magical or mystical. It's because it has the most touch points. Like, hey, that 200, I mean, how many times is that 200 weekly, which somebody in the Traders Lounge the other day called Grandmama? That, you know, so the 9's my girlfriend. Like, how many times does that 200 weekly get action? Grandmama don't get as much action as she used to. Like, comes down to the 200.
I don't know about that analogy there.
Once every 5, 6, 7 years, like it doesn't get there. And so, like, I like it. It's powerful, but that 200 weekly doesn't get many touch points. Those short-term EMAs, they get touch points all the time. I mean, you go to PayPal. I mean, this is why, like, during those uptrends, some of those other moving averages, go to a daily chart. Some of those other moving averages, they just don't get any touch points. But those shorter term ones are getting.
I'm still back on Grandma's not getting
Yeah, I can't stop laughing.
I don't even know what you've been saying for the last like 60 seconds, Chuck. I've been thinking about the 9 being your girlfriend, and all of a sudden the 200 is Grandma, and I'm like,
Grandmama.
I'm stuck.
But, hey, but when Grandma goes out and parties, it's really powerful. Look at that bounce.
That's Grandma saying, "Hey, listen, let's go turn up the night."
Like,
okay.
Grandma's getting turned.
When I go out, we're partying, and look at the bounce off the 200.
Oh, I cannot imagine the fun you guys have in the Traders Lounge. I cannot imagine the fun you guys have.
I mean, so
Lord Almighty,
that's why I like the 5 and the 9 is because. You know,
I want to know the individual in the Traders Lounge who called it Grandma. We got to give it.
But I might be wrong.
That does sound like a Jimbo comment.
I can't remember exactly who said it, but when they said it, I was like, oh my gosh, that's perfect. The 200's Grandmama.
I'm still stuck on it. It's fantastic.
I still need to find good names for the 20 and 50. Like,
I'm going to leave it up to you. I can't come up with something that
girlfriend. You don't get to decide. They decide you. They choose you.
Oh, so you just got to kind of let it happen.
Yeah, the market's a mess right now. Like, there is going to be opportunity because guess what?
Okay, then the 9's the crazy ex-girlfriend at this point.
No, she's not
crazy ex-girlfriend.
She's not crazy. No, she's very rational. Very sane. Very orderly.
I like it. Jimbo, comment of the day. We got to give Jimbo some credit. Guys, check out the Trade Justice podcast this week. We had a wonderful podcast, very, very fun podcast this previous week. Also, while you're over there, get that newsletter. It's just in the newsletter section. If you're not a member of Tackle Trading, guys, this is the week to go out there and sign up for that 15-day free trial because we're going to put in the work for those scouting reports today and tomorrow, guys. You're going to have some wonderful, wonderful, wonderful scouting reports. We're going to scour the entire marketplace, and we're going to have a lot of fun. And I just want to say I'm very thankful for Mark today because, Mark, I was not planning on doing a whole lot of talking today. And that's because I just got done mentoring a wonderful, wonderful new student by the name of David. And I was kind of my voice was a little shaky because I've talked a lot in the last few days. And you did not disappoint. You took it and ran, Mark. So I'm very thankful for you. And I'm glad that you were happy to be on the halftime crew with the halftime.
I didn't say I was happy to be
here. I know, I said that.
I
said that.
I'm happy to be here.
All right, guys. Hashtag Team Tackle.
He's enjoying Friday Fun Day. And yes, I was going to throw that in there.
Go sign up for a free trial. Email me at Team at Tackle Trading. The option report, I'm basically going to put from now until when it's released into that report because it's important marketplace. And I know people are going to be making decisions and we take it seriously.
You know what I love about what's happening with those scouting reports over the last few weeks is there's a little bit of competition within the coaches right now. And I like that. I like that. The coaches are now starting to compete with who can create the best scouting report.
Well, we all think we're the best. We just want the world to know it.
Yeah. Well, Gino set the bar last week, guys.
Yeah.
2 weeks ago, we had our highest options report and stock report tackle trading has ever had in terms of total views. And so that competition is fierce. So you better put in the work tonight, Mark. You got a standard now.
Listen, I don't care about that. I just can't. Well, of course I do.
Of course you do. What do you think I'm doing here? Are you kidding me?
He's
I'm
challenging you.
Stoking the fire. Come on.
But listen, I just don't want people to do stupid stuff in this trading environment. Like, there's nothing wrong with piddling. There's nothing wrong with piddling. There's nothing wrong with being a little conservative.
Oh, nothing. Lower position size. And James hit the mad cow. The mad cow analogy this week was the best analogy in the entire trading world. And that happened with Gino. Oh, it was fantastic. Gino's mad cow disease analogy during the Market Skyline during the Train Joseph podcast. You were there.
I still don't have any idea.
Yes, you got to go listen to the podcast.
Yeah, it's a good one. It's a good one. All right, guys, we're going to be in the scouting report meeting later on today. Get those scouting reports tomorrow and Sunday to be your guide for approaching the market next week. Until we see you again in the halftime report on Monday, guys, have an absolutely fantastic weekend this weekend. Get ready for the market next week. We're going to have a wonderful, wonderful trading environment, in my opinion, although it is going to be volatile. I still think it's going to be really sexy and really awesome. So, guys, from us to you, have an absolute great weekend. We'll be back with you on Monday. Check those scouting reports over the weekend.